I've done is built that framework of how crypto is just a macro asset. And it took a long time for people to believe that. They thought it's something different, it's something unique. It's a macro asset. So you apply the same things that I've always used, which is liquidity, business cycle, all that stuff, plus a bit of technicals and sentiment. There's no voodoo here. It's pretty straightforward as an asset. It's just more volatile. So it's harder to deal with. But you were right. What I was seeing was like the liquidity indicators like global M2 had stabilized and started going up. It leads Bitcoin. Bitcoin was following it almost perfectly. So I was starting to look for the bottom. Then I start looking at stuff like, okay, where's sentiment on NASDAQ? Because it's tech stock, same thing. It was in the gutter.
Right.
Sentiment was the worst I had seen since COVID. And that was across the board, across everything. Even hedge fund long short, everybody was max bearish.
Raoul Pal, former Goldman Sachs executive and founder of Real Vision, has become a go-to macro voice for investors navigating the volatile intersection of traditional finance and crypto. Known for his data-driven frameworks and global liquidity models, Pal now makes a robust case. Crypto, particularly Bitcoin, is no longer a fringe innovation. It's a macro asset class driven by the same forces that move equities, currencies, and bonds. In this discussion, Pal lays out the simplicity of his thesis. There's no voodoo here, he says. It's liquidity, the business cycle, and sentiment, plus some technicals. The volatility may scare off some, but the playbook remains the same. When liquidity rises, crypto follows. Global M2 growth, easing financial conditions, and sentiment washouts have all lined up in near-perfect V-shaped recoveries. And institutional money is waking up. Sovereign wealth funds from the Middle East are entering the space. U.S. regulation is taking shape. Pension funds, asset managers, and even Wall Street giants like Goldman and JP Morgan are building infrastructure but waiting on final clarity. According to Pal, we're entering a phase of forward-looking liquidity. Capital is being pushed into risk assets through dollar weakness, global rate ceilings, or balance sheet mechanics. And this time, crypto is squarely in the mix. He draws parallels to 1998, macro panic, sharp corrections, then 2 years of straight-line growth as central banks stepped in. We may be rerunning that playbook, Pal says. Tail risks are being priced out, and people are still underweight. If you're watching global markets and trying to position for the next leg higher, don't forget to like, subscribe, and hit the bell icon. Thank you, and enjoy the video.
What I've done is built that framework of how crypto is just a macro asset. And it took a long time for people to believe that. They thought it's something different, it's something unique. It's a macro asset. So you apply the same things that I've always used, which is liquidity, business cycle, all that stuff, plus a bit of technicals and sentiment. There's no voodoo here. It's pretty straightforward as an asset. It's just more volatile. The liquidity indicators like global M2 had stabilized and started going up. It leads Bitcoin. Bitcoin was following it almost perfectly. So I was starting to look for the bottom. Then I start looking at stuff like, okay, where's sentiment on NASDAQ? Because it's tech stock, same thing. It was in the gutter.
Right.
Sentiment was the worst I had seen since COVID. And that was across the board, across everything. Even hedge fund long short, everybody was max bearish. And I'm looking at liquidity. It's going up. I'm seeing the market getting fearful over a narrative. And I'm like, well, what is the likely outcome here? Are they going to have 150%, a trillion percent tariffs on China? No, they're going to reach something normal. So you've gone from peak headline fear to things could only be better from here. So for me, it was like a no-brainer of an opportunity, both in tech stocks and in crypto. And so going forwards now, normally speaking, this is the period, my framework is about, them rolling the debt and having to provide liquidity to do so. Mm-hmm. And so what we've got is a lot of forward-looking liquidity coming out of whether it's the weakness of the dollar, whether it's other countries using their balance sheets, a number of different mechanisms. And all of that to me is suggesting that the rest of this year is going to be very strong. And I was kind of thinking the NASDAQ was going to be a V-shaped recovery. And my God, it was a V-shaped recovery. And people are still underweight and short. It's a hell of a setup. I've just come back from the Middle East. All of the sovereign wealth funds are now buying. right? These are the largest pools of capital in the world. We're hearing it out of Saudi, out of Abu Dhabi, out of Qatar, and out of Bahrain. And why that's happening is because the US has become crypto friendly. It's the green light. So the US will get some regulation through. There'll be a bit of a shit show and debating about it and the usual stuff, but they will get some regulation through, which is the clarity that all of the pension funds need. So they're waiting as well. So there is a lot of buying to come from the really big players who've been waiting. Like Goldman has not been able to fully build out its desk, and JP Morgan haven't. They've had crypto for a while, but only for certain types of customers. But they want to build out suites of product, but they've been waiting for regulatory clarity. So yeah, I think it's a big deal, actually. I really do. The institutions are still either trying to figure out what this thing is. Yeah. Right? I had a conversation with one of the biggest kind of financial asset management firms in the world yesterday, based out of the US. And they're like, they've even got a crypto division, but they're other kind of where they allocate the assets. They're like, we don't know how to deal with this. So they're still trying to figure out what it is. Yeah. Like they haven't figured out it's a macro asset. Others have. The sovereign wealth funds obviously just doing it for diversification of reserves. They're like, it's a technology, it's a diversification of reserves. So if the US is going to do it, we're going to do it. So there's different groups doing different stuff. There is a bunch of people who still don't really want to do the homework on it. They're like, we don't know, it's too volatile for us. But I think usually it's the first mover advantage in this. And, again, it reminds me a lot of back in the day when Goldman rolled out the GSCI index and nobody had commodities in their portfolios. And that team had to go around and sell commodities to everybody.
Pal breaks down what he calls the domino effect of macro. It starts with financial conditions, dollar, rates, oil, which lead the ISM and macro indicators by 9 months. Those, in turn, lead global liquidity, like M2, by 6 months. And liquidity, it leads Bitcoin and the NASDAQ by 3. His shock discovery, gold responds to financial conditions in real time. As soon as the dollar weakens or oil falls, gold jumps. Why? Because it's a pure currency asset. That real-time signal gives us the earliest read on easing. The takeaway? Bitcoin's strength isn't random. It's riding a liquidity wave that's already in motion. If you understand the sequencing, you can front-run the recovery. Institutions that once ignored Bitcoin are now quietly structuring products. They're still figuring it out, Pal says, but the capital is coming. Let's get back to the interview.
We overlaid the chart of 1997. The Asian crisis was a short, sharp shock versus now it's almost identical. The kind of the 4-month period leading up to it, 4 or 5 months leading up to it. And that was a V-shaped recovery as well, because everybody was caught off sides because they thought the world was going to end. Liquidity came into the system. It was via the Fed that time cutting rates and all the other central banks. And the market just went up in a straight line for the next 2 years.
We'll see how
it feels that way to me. And I think you're right. There is a risk here that we rerun 98, 99 or 99 because you've just taken all the tail risk. Let's assume that Saudi, the US, and Israel do a deal with Iran. That feels like it's going to happen. Let's say that there will be a ceasefire in Ukraine, and let's assume that the Chinese will come to the table, do something reasonable. Those 3 things happen. We've taken all of the left tail off the table. And people are going to be like, oh, but inflation's going to come back. And they're going to keep saying that for 18 months, which they kept saying as inflation's fall. So I think it is not a small probability that we have a really blow off kind of next 9 months or so. The last Trump cycle in 2017, we had the same thing. The market corrected in the beginning because everyone's fearing tariffs and the same narrative. The Fed were raising rates and doing the balance sheet runoff. And the market screamed higher all year because the Chinese were stimulating, the Europeans had to stimulate. So it feels like, even if the Fed don't do anything, I still think the Fed cut, but let's assume they don't. Well, that's not a prerequisite for the market to do anything. As you said, as long as rates aren't jacking higher, everything's fine. I came up with something, it was only last month in Global Macro Investor that kind of shocked me, hadn't figured out, is that there is a set of dominoes that happen in markets. Financial conditions lead everything. For financial conditions, we use the dollar, rates, and oil, right? The three big financial conditions thing. What we found is that leads like the ISM and other stuff by about 9 months. Liquidity is what drives Bitcoin and NASDAQ, and it leads it by 3 months. So global M2, let's say, leads Bitcoin by about 3 months. I found out, I was like, what's going on with gold? I put it against against financial conditions. It reacts in real time to financial conditions.
Wow.
I'm like, holy shit, why didn't I figure this out before? Of all the things, well, because it's a pure currency asset, right? It's the pure thing. And so the moment financial conditions ease, gold moves. And so it's leading everything else. Which is, we were kind of thinking, is it leading or is it doing something weird? Is it trying to price in some catastrophic risk? No, it was just pricing in the fall in the dollar, the fall, rates didn't really fall a great deal, but the fall in oil. But that's what the financial conditions are in the end. Yeah. It's the debasement of currency. It's the whole thing is the debasement of currency by excess liquidity being pumped into markets by any mechanism possible. At first, they used the balance sheet. Then we all figured that out and called that money printing. So then they did this Fed net liquidity trick, which was the balance sheet plus the Treasury General account and the reverse repo. Yeah. Then we figured that out. And then they moved to total global liquidity, which is including M2, which is stuff it on the bank's balance sheets. So force the banks to buy bonds. That's the game.
Raoul Pal's message is calm, clear, and deeply analytical. Crypto is a macro asset, and liquidity is rising. From Middle Eastern sovereigns to Wall Street banks, the big players are finally gearing up, not for speculation, but for allocation. And retail is still asleep. Sentiment is in the gutter. Positioning is light. That's the setup Pal loves most. Fear at the bottom, liquidity rising underneath. We've seen this before. The Asian crisis in '98, Trump's early term in 2017. Sharp drops followed by explosive upside. This time, crypto's in the basket. So, do your homework, track liquidity, and ignore the noise. If this is another V-shaped macro recovery, the window to act is closing fast. Share your thoughts on Raoul Pal's analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.